Good morning. Welcome to our latest webinar. Today we have a special guest, Darris Cassidy. The topic today is going from fund manager, pursuer, to family office president, pursuee. So Darris, welcome to the program.
Yeah, thank you. Thanks for having me.
Yeah, so a lot of folks know that Darris and I have worked together for a number of years, know each other quite well. So happy to have Darris here, and I think it should be an interesting conversation. So Darris, why don't you start? Give us a little background about yourself and kind of how you got into the real estate business and the fund business and all that, and give us some context for where we'll go here as you make the move over to the family office.
Sure. Yeah. So I've been in real estate my entire career. Really, actually started off pretty much as a teenager. I mean, one of my very first jobs was at a appraisal company. I just went out to dinner with my daughter last night, and she was asking me about my early jobs. And so, yeah, worked in an appraisal company just as a runner, delivering appraisals, taking pictures, that sort of thing. Sold mortgage-backed security bonds, and then right out of college, after getting a degree in finance, went into commercial real estate banking, and primarily doing apartment lending as well as some other stuff, a lot of Fannie Mae type loans, and then became an originator at a bank. Ended up becoming a CFO for a home builder, pretty large production home builder. We also developed apartments, condos, a little bit of industrial, and did that during the housing boom and the housing bust. And then kind of coming out of that bust is when I started my first, I call them baby funds. So just, you know, structured those at the time and raised a little bit of capital to buy REO homes or foreclosed homes from those banks in bulk. So packages of those, and then sold them off on land sale contracts to create cash flows, and eventually exited out of those, and then managed several funds since then, raised a lot of capital doing that.
Yeah,
And
I know in those
that's
early
what we'll get
days.
into.
Yeah, I know in those early days when you were working with the home building company with someone very familiar, and they actually started a fund at some point, and
Yeah.
you were working with them as a CFO, working with investors there. I think that was kind of the start of the point where you're really raising capital, right? And then did it for them, and then ultimately did it for your own funds
Yep.
and subsequent funds. So, how did you kind of get into the capital raise side, and maybe give people some context around how you gravitated really from what was the finance side and the CFO side to turning into really more of a focus and emphasis on capital?
Yeah, almost just by default, given my personality, I suppose. It wasn't necessarily the plan. I much prefer to be on the structuring, the negotiation side of things, not as much on executing the strategy. I don't personally want to be a home builder, but figuring out the capital structure of that and that sort of thing was always really where I thought I was best suited. But capital raising is just a huge need, and finding debt is one thing. There's a lot of lenders, a lot of different types. So that's, kind of where I started on the debt side, but pretty quickly recognized that equity is really what makes deals and funds work and get going. And it happens to be what I believe to be the hardest part of the real estate business, is raising capital and raising from investors, and whether that's in one deal at a time or in a fund format, it's just extremely challenging. And so it was never necessarily what I was striving to become. It just
Wow.
someone had to do it, right? And I tend to be better at it than some others, and so that's how it happened, but not by design.
Yeah, I know that's super accurate in my mind, and I see it all the time in our admin and advisory practice with managers, is that raising capital is almost always the hardest part for real estate people, right?
Yeah.
So figuring out how to do that is just an ongoing challenge for pretty much everybody. So let's dig deeper into that side of things. So as you kind of got more and more gravitated toward that side of the equation, I know that you did a lot of capital raising, and in that process, it became clear that family offices were and are a large potential source of capital. So maybe describe kind of the early efforts that you made and some of the just some of the efforts and lessons from the perspective of a capital raiser initially. Like, what were your perceptions of trying to go after family offices, and what successes and failures and lessons did you have? And we'll maybe just have some dialogue around that.
Yeah. I think, first of all, the whole term family office is, I feel like it's better defined now than it was 10 plus years ago when I really started diving into that world. And so, at the time, we still used the term family office, but it wasn't really clear what that meant. I mean, it meant uber wealthy people, more than the high net worth, just not just accredited. So we knew what it meant, but because there wasn't a good definition of it, a lot of family offices didn't even recognize themselves to be that. And so they were very difficult to identify because they didn't even identify themselves that way. And so it was almost like hunting for unicorns, in that it felt a little bit mythical. And then how do you even find them? How do you bump into them? How do you then begin a relationship to then transition into being able to raise capital? Was just an unknown thing how to do. So I attempted pretty much everything that people can imagine, going to conferences, cold calling, cold emailing, marketing, social media stuff.
Well, speaking of conferences, let me interject real quick. It's like, that became a thing, right? And there's family office group, and there's family office this, family office that. Did you went to a number of those conferences? Did you have any success there?
No, I never raised a dollar going to those conferences. And I just went to a conference for the first time, a family office conference for the first time as a family office. And nobody from that conference has raised money from me, or hasn't approached it correctly from my perspective since I attended that conference. So it's interesting because, yes, I attended a lot of those. I, always hoped it would work out and I would be able to raise money, and I did not raise a dollar from any of those efforts. And not to say that it isn't possible. I think if I had to do it all over again, knowing what I know now, I probably could pull it off. But
what would you do different in that specific instance, like at these conferences?
Well, yeah. So I think it really comes down to, and we've spoken about this, there's a lot of luck involved. And one of the biggest anxieties that capital raisers have, myself included, is that I can't tell you how to raise capital or how I raise capital. And there isn't like a scientific formulaic way to do it. It's just a lot of grinding and effort and a lot of luck and putting yourself in the right position to capture that luck, if you will. Right. So, in regard to what I would do differently and what I saw people at this recent conference doing, not as, probably the way I used to do it, is they're running around trying to talk to as many people as they can, and a lot of surface level discussions, and there isn't a deeper connection that occurs. And then everyone leaves and goes home and nothing happens. And so there's been a few people that have done a good job of following up with me since then. But I would say that while we were there, a lot of people didn't even approach me to discuss their investment opportunities other than, I guess just meeting with themselves and very surface, like I mentioned. So the best thing that I saw people doing there is people that knew me, or we've met in the past, or we've spoken in the past, reaching out ahead of time just to say they will be there. And then, you know how conferences are pretty chaotic. So scheduling a time to sit down isn't great. But when I was there, certain people would text me while we were there and just say, I'm in the lobby. Can we meet for 5 minutes? And having that more personalized connection to sitting down and not being in the massive ballroom with hundreds of people and sitting face to face. And that worked pretty well. And then, of course, there's the follow-up situation. So there are a few people I see doing it, and they're pretty well known in the industry for being able to raise a lot of money. And I see them behaving in a way that's different than how I see the majority of people.
Yeah, and I mean, I'll come back to that in a minute. I know you said something about luck, right? And obviously, I think anything we're talking about here presupposes that, you have quality deal flow and you have quality capacity to find things that make sense and a well underwritten thing that has good returns and that kind of thing. So this isn't a conversation around underwriting and all of that. So let's just say that that's kind of table stakes. You need to have that. But then when you say luck, what do you mean by luck? Like, how is it that somebody would be lucky versus not lucky? Is it just a matter of happening to run into somebody? It's timing. It's somebody Like, what do you mean by that?
Well, and luck is probably not the perfect word. I mean, I think you create your own luck in a way. So in that sense, it's not just totally up to fate. I think it's a matter of being very specific about the type of person you're looking to meet and the type of investor you're looking to meet. And then when you do meet them, approaching that in a way that allows for a relationship to build, allows for trust to be established, and allows for them to be opening to considering an investment. And all of that takes a lot of time and patience. And that's what creates what I'd call luck, is just being in a position to even start that process. And what I see people doing is not being in a position to even meet the person in the first place or recognize them in the first place. But then a lot of capital raisers tend to basically rush into it and they kind of blow their chance right out of the gate. And they show up and throw up, exactly. And they don't allow for it to occur naturally the way that a good capital raising and investing relationship should, which is really what it takes, right? It takes a lot of time and it takes a lot of patience, and then it takes nurturing that so you can get repeat investment. And that's the key to it. I think a lot of capital raisers are kind of looking for what they need today, and they're not necessarily trying to build this machine that kind of continues to accumulate new relationships and new investors so you can raise more and more money over time, as opposed to just what you need to raise right now for the deal you have to close tomorrow.
So in your capacity as a capital raiser and a fund manager, where, my experience is that you go to these events, the family offices, the real ones, right? And there's lots of them that's another thing, right? I would call fake family offices. These are people that pretend to be something they're not. Like differentiating the ones that are for real versus the ones that are pretending to be something, that's always challenging. Right. And describe some of your frustrations as a manager when going after the family offices. And then what we're going to get to here in a few moments is kind of, now that you're on the other side of the fence, what is your perception from, looking at it from the other angle? Like, what were the things that frustrated you or that you found challenging, or obstacles or whatever during, when you're trying to raise from family offices?
Well, so let's just get the fake family offices out of the way and then focus on the real ones. So the fake ones, as you're referring to, and they may be, wealthy individuals behind it, but what you're referring to, and one of my biggest frustrations over the years, was showing up at those events and people putting themselves out there as family offices and you go to raise money from them, but then they turn around and they're trying to raise money from you, and they're also working the room and trying to raise money from everyone else there because they are more of a real estate sponsor.
Yeah.
And there's nothing wrong with that. Maybe they have the wealth to call themselves a family office, but it's a little disingenuous. And that was really frustrating because what I witnessed is that those people, being a family office, would be more shoulder to shoulder with the real family offices, and they had the advantage over the true real estate sponsor in raising capital because they just position themselves right next to the other families. And it just felt a little disingenuous. And it's not to say that it's totally wrong or that they don't have the wealth, but that was one of the big frustrations. Then when I kind of answer the question about the frustrations with what I would call the true allocators, we'll call them that, not people raising money, the true allocating family offices. The frustration there is that it's hard to get their attention. Once you have it, it's hard to hold their attention. They don't necessarily operate their family offices or their investments like a business as much as it's just their life. And so their investment style or reviewing or communicating has to weave into their lifestyle and not as much about how normal business people operate, like scheduling meetings and coming into an office every day and that sort of thing. And so you have to, work to accommodate that and then recognize it. And then because of that, they don't necessarily have like a clear or defined investment mandate, right? And so, and even if they are searching for something specific today, that doesn't mean that's what they're going to be looking for tomorrow, as in regard to the type of investing and investment they want. And so it just feels like a lot of a moving target that you can't pin them down to keep and get their attention. Once you have it, it's difficult to figure out what they are even looking for and if what you have is what they're looking for. And then it's difficult to get a decision out of them. And a lot of times there just is no decision and there's no communication or feedback as to why. And that is very frustrating.
No, well, that's
But
part of what I think you mean by luck too, right? Because some of that
yeah,
is, to your point, you kind of make your own luck because you don't get lucky by sitting around doing nothing, but you
yeah,
can get lucky, and it does require some luck, even when you're really active, because if you happen to hit them at the right time, on the right
yeah,
day, when they got cash available and they're in
yeah,
mode and they're not distracted by family matters or tax issues or travel or whatever else it might be, then you get an allocation, right?
that's
Which
the luck. That's
exactly.
exactly right. Yeah, that's what I'm talking about. That's the luck you create. But sitting back and not putting yourself in that position, which is uncomfortable a lot of times, it can be awkward and it can be frustrating, but you have to just keep doing it in order to create that luck.
And I think the hard part for a lot of people is that you reach a point of frustration with it where it's like, is it even worth continuing to keep doing this? Because I'd say family offices have been one of the hardest sources to develop a predictable, nothing's predictable, but a reliable way to raise money because so much of it is just timing and so forth. So it's almost like you have to play the numbers game and
Yeah,
get enough of those relationships there that you can keep working, never knowing for sure which one's going to come to fruition at which
yeah,
point in time. But the law of large numbers being that sooner or later something's going to hit, which is a
yeah,
frustrating way to kind of build an infrastructure, right? So
yeah, yeah, exactly. It's like I said, it creates a lot of anxiety, I think, for capital raisers because you're under the gun, you want to raise money, you have the pressure, you need to close on deals. But there's no way to predict how it's going to play out. And so you just have to play the law of numbers, as you said, and have a lot of things going at the same time, and really hoping that it hits here and it hits there. And a lot of it is, to your point, timing considerations. And a lot of the families won't necessarily communicate to you what the timing things are.
Yeah, yeah, because either they don't know or they don't feel like they need to, fill you in on that, right? It's not on their
Yeah.
priority.
I think capital raisers presume that family offices are just sitting on so much cash at all times and they can stroke any check they want anytime they want. That's just not the case. The best of, it's finance, right? So you want to stay as fully invested as you can and not be sitting on cash. But then there are cash events that happen, the sale of an asset, or whatever it may be,
Yeah.
or because they accumulate cash over time from the income coming off the portfolio and it builds up and they need to allocate, right? But it's not just
Yeah.
like you see a deal today, you write a check tomorrow. There's a lot of timing considerations and tax considerations.
Yeah. So maybe then pivoting to now that you made the move over into the family office, I know that, there's a lot of frustrations on the cap. Well, one other quick question before I go there is I think my observation is that a lot of shops don't necessarily have someone specifically dedicated to the capital raise side. It's more of a, because usually, fund managers set something up. The reason they do it is because they are really good at real estate, right? They find good opportunities and they can generate good returns, and they, make money on the buy, and they manage the assets well, et cetera, et cetera. And then, to capitalize, it's a capital intensive business, right? I mean, if you're a sponsor, a fund manager, you got to raise a lot of money and you got to do it all the time on an ongoing basis. So having someone there whose primary role or exclusive role is that, I feel like that's something that a lot of shops don't have. It's a part-time job for multiple people, and then it never gets the full attention. And specifically to what you're talking about in the family office world, if you don't have somebody doing it all the time, how are you ever going to hit the timing you need with enough people to ever raise any money? I mean, what's your thoughts on that?
Yeah, I think it's very important to have somebody that is fully focused on it. And I think that person needs to basically treat it as a lifestyle more than a job, right? It's not just you show up from 9 to 5 and sit at your desk and try to figure it out. You need to get out in the world and meet with people and be active and basically put yourself in the same positions, the same social scenes, the same philanthropic areas. I mean, and be a genuine person that people want to hang out with, and not just hammering people to raise money. If your only outreach and your only discussions and your only interactions with the families is just, will you write me a check? That's just a terrible way to go about it.
Yeah, exactly.
So you really that person needs to treat it like that is their lifestyle. And that looks pretty ridiculous to some people, especially the hardcore real estate people. It looks like, to have someone on your team that is part of their job is to go on ski trips or go golfing all the time, or, show up at these conferences or traveling or whatever it is. That looks like it's not a job, but that is what capital raising is.
And it can be hard for small companies to afford having somebody there to do that. And there's also securities laws and so forth as to, is somebody an employee of the company, or are they an outside capital raiser? How are they getting compensated? That's way beyond the scope of this webinar. So my admonition to everybody is check with a lawyer on that, because it's very important. But all of that said, I feel like the earlier in the lifespan of someone's business that they can figure out how to get someone on the team who's doing what you're talking about, not just with family offices, but any investors, right? Accredited investors and high net worths and institutions and everything, right? Is the better chance you have of long-term capital raise success. All right, so let's move
Yeah.
over now. So now you've gone from the pursuer and all the frustrations associated with that to now you're the pursuee. What is it like behind the curtain over at a family office? That is it what you thought it would be? Is it different? Like how would you characterize it compared to being on the other side?
Yeah, I mean, I think it's a lot of what I thought it would be. It just confirmed a lot of what we just spoke through, right? Where the families are busy. A lot of them don't have someone like myself and, that works for the family and can, treat it more like how funds are managed and like real investment management shops, if you will. But yeah, they travel a lot and there's a lot of tax considerations and estate planning and there's family dynamics that go on and what makes sense to invest in right now changes all the time, right? So what I'm searching for today and had meetings about this morning is completely different than what I was searching for a month ago. And so a month ago, I had people calling to try and raise capital, and I told them what we were looking for at that point. Well, it's different today, and now what I'm telling people is going to be different than what it's going to be, in a few months. So to me, it's been interesting to watch the process of people trying to raise money. I think that's been kind of the more fascinating part of it. The
Yeah.
family situation is kind of what I anticipated and what people can probably guess, and it's all the things we've spoken about. But I think the more interesting part is watching how capital raisers approach it and what I see people doing really well and then see what people are not doing well and really have no shot. Like I have no clue how they're going to raise money, not just from myself, but from, others. So
Yeah, to that end, and there's everybody on this call and all the managers I deal with. Obviously, that's what they're after all the time. It's how do I raise more money? So let's touch upon that. And before I do, as we get to the bottom of the hour here, if anybody got any questions, please type them in the Q&A box, and we'll do our best to get to them here as we get toward wrapping up. But what do you see from these capital raisers that you like or don't like, and what advice would you give to the people on the call who are trying to raise money from family offices to give them the best chance of success?
well, I just see a lot of people like your term earlier, the show up and throw up approach, where I mean, I'm receiving deals or solicitation every day, and not just, spam emails. I mean, like direct people are reaching out, and a lot of times the approach just isn't great. And there are things that I've done in the past, so this isn't me being critical of any people. It's just lessons to, that's the purpose of this discussion, I suppose. So, like to me at this point, for how many deals are coming in, every single PowerPoint presentation and every deck, they all look the same. Every pro forma looks the same. The return profiles, they look the same. And of course, this one has better fonts than the other one, but at the end of the day, it's like that is not going to raise money.
Yes. So how does somebody distinguish themselves then, if that's the case?
To communicate, to talk as a person and not just by email. And phone is fine, text is fine, Zoom calls are fine, but once it reaches a certain point, get in-person meetings and go out of your way to do that. So I have a group flying in tomorrow from Los Angeles. I've never met them in person, and it started by by me initially looking at a deal and it looked pretty good. I wasn't in a position to invest in that deal at that timing for all the reasons we've just spoken about, but looked like an interesting deal. They handled me saying no to that deal very well. I think that's the other thing that just I see a lot of, and I'll come back to that. So I had to say no to that investment, and they've done a good job of just touching base at what I'd say an appropriate cadence. Another thing to touch on, like accept the answer no and do it well. Follow up at an appropriate cadence is different than what I see some people doing. And then when the timing makes sense, set up a meeting, not for the purpose of coming to hard pitch an investment opportunity, but just for the purpose of meeting. And that doesn't need to be any big thing. It can just be an hour, even if you're flying across the country to have that one meeting. And that will establish the beginning of a relationship that, as long as you continue to accept the decline of saying no and hearing no a lot, eventually that will lead to capital being invested with those people. And so to come back to some of those things, I see a lot of people when I say no, and it might be because I don't like the deal, the structure doesn't work, it's not what we're looking for at the moment, we have other timing considerations, and you say no to someone and they guilt you, they make you feel bad, they get desperate and start throwing Hail Marys around, trying to hope that you change your mind. Yeah, and it just gets really, it makes me feel gross, right? And I don't like it, and I have a physical reaction to it, which I'm sure is not unusual for people. And then it's like, I don't want to look at another deal because I don't want to say no again and go through this whole thing again.
I think that's a big reason why a lot of families don't even communicate or return phone calls, because they don't, most of the time, the vast majority of the time, the answer is going to be no. And they just don't want to have to deal with, the conflict or the confrontation or the reaction from the manager. So therefore, it's easier just to not even bother to get back to them.
That I think that is one of the biggest things, and that's what I see and feel almost daily, where I have that conflict and I have somebody, I'll call it freaking out, which is too strong of a word, but they just do not handle it well, and I don't want to talk to them again. I see their caller ID pop up when they call, and I just feel myself do not answer the phone. You don't want to create that reaction in people. And so, handling the no is extremely important. The cadence and the type of follow-up is also important, in that you don't want to follow up just persistently for no reason, or and be a nuisance. But I think, and you also don't want to just go dark and not follow up with people because they forget about you and they're on doing other things. And if you're not kind of top of mind when they do have a need and when the timing works, I'll give you a real life example right now. We are just entered a contract to sell an asset. I need the 1031 into something. So people don't necessarily know that because it's brand new. So what have I done? I reached out to everyone that I have good, comfortable relationships with that are still top of mind, because they've pinged me, they've reached out for one reason or another, and just saying, what do you have, or can you help with this? So that's why appropriate follow-up is important, even maybe more important when you're not even raising for something at the moment, just touching base for the sake of it.
Yeah. Well, there's a lot to be said for in-person meetings and for appropriate follow-up, and that's just sales 101, right? For not just raising capital, but any type of sale.
Yeah.
So we got a few questions here. Let's move to a few of these. So let me scroll through some of these here. how, and this gets into more around the concept of, birds of a feather flock together, right? Multifamily offices, family offices, clubbing deals, et cetera. But there's more than one question here along those lines, but kind of I'll amalgamate a couple of these. But what's your experience around how common it is for a family office to bring in other family offices into the mix on a deal or a fund and so forth? And what's your experience around how you guys work with other family offices?
Yeah, I think that's a common thing. A big component for families that I'm appreciating more, and the reasons for more now than maybe in the past, is that they want some control rights and, over major decisions. They don't want sponsors selling an asset and creating a tax situation they're not prepared for, don't want to happen, or whatever the case may be. So I think a lot of families do invest in things together. There's trust amongst them. And then, to what I said earlier, a lot of them don't have like people like myself and a staff that is out in the deal flow and talking and looking at a lot of deals. And so um, a lot of what I've witnessed is a lot of families that don't have their own staff generally rely on their relationships with other family offices to invest alongside of them when the timing
Yeah.
comes up that they need to allocate something, and that's a lot of times how they do it. uh so
Well, that's happening more and more, isn't it? Where you find a single family office that's got some resources that then is lumping, together multiple families and really even becoming a multifamily office, which, that term has come about. And
yeah,
that's really, another name for really a professionally run, on like full service, um,
yeah,
I mean, not just wealth management, but tax planning and estate planning and all kinds of other things, services that families need, right?
yeah.
Are you guys involved in any of that kind of thing, or what? Have you had enough time yet to really kind of experience, understand how that's all working and what the implication might be to the people on the call that are raising capital?
Yeah, well, I think it's interesting because the whole multifamily office has always been fascinating to me as a from the capital raise side, because it's like, well, why go after a single family if you can find the multifamily? And I never put my finger on it, but now, being at a family office, what I see, and this is probably not 100% accurate or true, so take it for what it is, but my interpretation, or what I've figured out, is that the multifamily offices, in a lot of cases, in almost every case that I can find them, they focus more on the things you mentioned: wealth management, estate planning, things of that nature, insurance needs, but in stocks and bonds, private equity investments, maybe, but very few of them have a lot of real estate expertise. And so finding a true real estate multifamily office, I haven't found one. And I'm sure they exist, to my comment, right? So I am personally interested in bringing on other families, not to club deals together and that sort of thing, which would be an outcome of it most likely, but more interested because they need a lot of help just managing their portfolio. I've gone through 10 to 12 or 15 debt and loan refinances within the last several months just on our portfolio. So if you're not a real estate person, if you made your wealth because you ran some other business, now you have a portfolio, and now you're in the middle of having to go through finding a loan and refinancing. If you don't know what you're doing, I mean, that's really, even if you know what you're doing, that's a lot of work and really challenging. So I don't see a lot of multifamily offices providing that sort of help
Yeah.
to people.
So if you were to hire a full-time sales development rep or capital raiser or whatever you want to call it, let's say for your fund, which is a role you've played in the past, like what key characteristics or experience, background, kind of industry experience or skill set do you think you would prioritize to ensure success or right? And you said one of them, right, which is that they're willing to treat that job as a lifestyle more than
Right? Yeah.
just a job. That's probably the biggest one, I'd imagine.
That's
right?
the biggest one. Yeah. And then someone with what I call soft skills. And I just started using that term more often because I'm on the uh, board for Gonzaga's business school. I went to Gonzaga, right? So I sit on the board of their business school and I meet with students. And a group of students I was chatting with a few weeks ago, and they were asking, some of the things I look for and how people could be successful. And I really think these soft skills, especially on the capital raise side, is the biggest thing. I mean, people's ability to handle rejection and hear no and not make it awkward, and their ability to, reach out to people and be likable, and people want to hang out with them. They want to go to dinner with them, and
How do you
whatever that
screen for
is.
that? Like how would you figure that out? Like before you hire
I I I don't know. I think you got to find somebody that kind of already does that just because they like doing it, right? Like, I mean, you've known me long enough. I do those things whether I was raising capital or not. And I think you don't want to hire somebody and hope they can morph into that or become that. It's just there are certain people that are very social, and that's what you're looking for. So somebody that's already behaving that way, and probably, if they have a spouse, someone that has a spouse that can be part of that as well, because you know uh, a lot of times it ends up that you're doing things with families and couples and spouses and certain events like charity events or gala dinners or whatever it looks like. You don't want a spouse that is you know, you can
yeah.
guess however I answer the rest of that
Well,
sentence, but
that gets tough in the interviewing process. Like
yeah,
not sure what you can ask and what you can't ask, right? What you have to glean, without asking.
yeah.
Uh, yeah, a number of questions in here about asset types and preferences. And I don't, do you have any broad generalities around what you think more families than not are looking for? Is cash flow, value add? Is it like there are some themes that you think is important, or is it vary significantly from one to the other?
I think it varies significantly from one to the other.
And I've seen like
Everyone,
more like the more wealth people have, usually they get to a point where they're more concerned with protecting the wealth than they are with making more wealth, right?
that's what I was going to say. That's exactly what I was going to say. And that's the main thing that comes into my mind is like, once you have that certain level of wealth, making a little bit more doesn't change your life. But so you don't necessarily want to be risking it and, you know, putting it up into risky assets just for the sake of making a better return. So I think that's important for people. I also think that different investment structures make sense for some and not for others. So, having optionality is important, meaning like some people don't want to invest into funds because the blind pool, they get locked up. Some people only want to invest into funds because it's easier and there's more diversification. So I think it's a little all over the map. I don't think it necessarily matters whether you're doing apartments or industrial or retail. They each have their place, but I think it's different per family, and not only per family, but per family member within a family.
Yeah, which is another level of granularity that's hard as a manager to really grasp, right? And
Yes.
know all of that. So the deeper you get in with people in terms of their willingness to share that information with you, that's another hard thing, right? It's like you're not going to go
Yes.
telling very many sponsors that unless and until you have a very deep relationship with them, right? Because it's just you don't have the time. I mean, you're
That's right.
inundated with people that want money, right, and your
Yeah.
attention. That seems like another thing, right? Is that they, from a family office's perspective, their guard is up, right? Because that the reason people are calling you is because they want some money, right?
Yes.
They want something from you. So how does a manager penetrate that guard. Part of it is you got to be, genuine. You can't be going in with that being the only objective. Because then if it is, then I don't want to deal with you in the first place, right?
Yeah, and I think that, if I were to get back on the capital raise side, to that point, I think kind of finding the gatekeepers of the family, if you will, like myself, and because your ability as a capital raiser to go directly to the family members, they don't want to talk to you. They do not want a phone call. And eventually if they're investing with you, then they do. And they want to hang out and everything else. But if you're just attempting for the first time to raise from the family, going and trying to get direct access to them that's not the way to go about it.
No.
You know.
But to your point, sometimes people have someone like you there, and sometimes they don't. But if they don't, then what do you do?
Then I think you develop a relationship, and it needs to be a genuine one with the members of the family that is not centered around them investing.
Yeah.
The investment part needs to be a secondary thing. It should never be asked for. It should probably not even be brought up the first however many times you meet them. It's more like they will bring it up. They'll ask what you do. They'll recognize what you do. You do real estate, investment stuff, and they'll let you know. That's how I would approach it if you're dealing directly with the family, as opposed to just starting to pitch deals constantly.
Yeah, and that's truly the long game, right? Because you got a deal close, in 4 weeks, and you got hard earnest money on there, and and you're under the gun, right? That's you probably do need to do what you just described, but you also got to raise the money from somebody to close the deal. So it's like that's a hard balance to strike for a lot of managers. So well, hey, we're coming up on 47 minutes past the hour, so we're a little over time. Quite a few more questions. Won't be able to get to all of them, so sorry if we didn't get to it, but appreciate everybody being on here. Darris, thanks for sharing some of your experience, and we'll see well attended deal here. We'll have to have you back as you gain more and more. I'm sure we could have another one of these conversations that cover lots of other interesting stuff. So thanks again for being here. Appreciate it.
Yeah, thank you. Talk soon.
All right, everybody. Thank you so much for being here next month. I don't remember exactly what we got on the docket, but I'm sure it will be equally as fascinating and interesting. So hopefully you'll make it back next month. Thanks so much for being here. See you next time.
Thanks, everyone. If you registered, you'll receive the recording tomorrow. Thank you.